Welcome, Fed friends. Today we're going to be talking about FEGLI in retirement and a little bit about what happens if somebody passes away. Like we covered before, FEGLI or Federal Employee Group Life Insurance is administered by MetLife. What that means is MetLife is the owner of the group insurance plan. They administer, we're not the owner of they own the Federal Employee Group Life Insurance plans. They do administer the program and do all of the customer service part of FEGLI. What most people don't realize, and most employees rather, is that your government benefits are actually group insurance plans wrapped in a government package. We've talked about this several times before. Um, and for FEGLI, that company or entity rather that provides the 5-year term policy, which is essentially what it is, only it's probably more of a contract with you and the government is MetLife. So if you're looking at other insurance or other life insurance and you say, hey, I don't want any life insurance, whatever, but you have FEGLI, well, just know that you are with an insurance company. So without further ado, we're going to talk about your options in retirement with different FEGLI benefits or different FEGLI options, if you will. If you remember, we have a basic option A, option B, and option C within the FEGLI program. So what does that mean in retirement though? And I would strongly encourage you to look at your FEGLI program or your life insurance program. If you have FEGLI and other life insurance, you may want to look at the whole bit. See, are you overinsured? Are you underinsured? Of course, we have people that can help you out with that. But without further ado, we're going to talk about the FEGLI program only. So with this, we've got basic coverage. Again, basic is your salary amount rounded to the nearest 2,000 plus or rounded to the nearest 1,000 plus 2,000, sorry. But what I want to make clear is we did cover also these different programs and the options of the FEGLI program while an employee is working and some of the other rules on how to increase, add, or get into the FEGLI program if you want to check out that video. Now, as you're planning for retirement, though, you do need, if you have FEGLI and you've had FEGLI for the past 5 years, then you will need to make a decision on what is going to happen with your coverage through the FEGLI program. So again, with basic, you can keep it, drop it by 50%, or drop it by 75%. What that means is you're going to pay a certain amount for the basic program till age 65, and then the premium will stay the same or reduce depending on what that option was that you chose. Now, with a 75% reduction, you would pay zero after the age of 65, and the program or the coverage only decreases by 75%. So it's a set amount that it decreases over time between the ages of 65 and 70 until it gets to that 25% of the benefit. And so there might be a way that you can coordinate this as like a final expense policy or something like that with other life insurance, especially depending on the cost and your insurability for life insurance, and of course your need for any insurance. The other optional coverage is option A. This automatically reduces by 75%. So you don't get a choice after retirement. You don't pay anything for the coverage and it will automatically reduce. Again, this is a straight $10,000 benefit. So by the time age 65 comes around, it's going to reduce. And by the end of the day, it's going to be $2,500 when it's finally done reducing. And so option B, you can keep 100% or drop 100% per multiple. So for instance, if you have 5 multiples of option B, at retirement, you can choose to keep 3 of those multiples at 100% and then drop 100% of those multiples, the other 2 multiples. Or vice versa, right? You can keep 2, drop 2, or drop 3, whatever that looks like. Either way, you would either keep 100% of the multiple or you would drop 100% of the multiple. The same is true with option C, but remember option C is for coverage for any dependents, such as your spouse and or any dependent children. So with that, you can always drop or decrease or cancel rather your FEGLI coverage at any time during your career and any time in retirement. Just know it's harder to get it back, right? In fact, once you've made the decision after age 65 on what that is going to do, your decision is final for what you're going to do with the FEGLI program. So it is an irrevocable decision once those options are made in retirement. So the form that you would use with the application is the SF 2818, and you can Google the form SF 2818. And you can go ahead and complete that form to continue your FEGLI coverage in retirement or to drop it, whatever you want to do with it though. That's how you notify OPM when you're filling out your retirement application on what choices you want to make with the FEGLI benefit that you have. So that is the FEGLI program in retirement. Now, as far as the premiums, one thing I do want to cover is basic can, depending on if you're going to keep it or not, will depend on how much premium there is to pay. Option A, like I said, is it automatically decreases. You pay a certain amount until 65 and then it's zero. And then for option B and option C, you will pay to keep per multiple, whatever that looks like. And it can get very expensive because it will continue to increase every 5 years throughout retirement as well. So very important to know what your FEGLI coverage is and what you want to do with it in retirement. And if you need to replace that coverage, what does that look like, right? We can help with all of that. So reach out if you need any more information on that. Now, to continue in the FEGLI program in retirement, then you, like we said before, you must have 5 years immediately preceding retirement, which most people do and have had FEGLI for that long. So that shouldn't be too much of an issue. But just know that you're responsible for all premiums in retirement. So what that means is your basic isn't going to be covered under the government anymore. They're not going to cover a certain amount of that, so you'll have to cover all of the premiums with that. So just keep that in mind. And like I said, and before, is that the premium does increase every 5 years as well. So you want to be ready for those increases if you choose to keep the policy. Upon death, the coverage is paid to a named insured or a standard order of precedence. However, if the standard order of precedence is in place and you do not have a named beneficiary, then it could go to probate, and that could prolong when whoever is going to be dealing with your financials or your estate, it could prolong how long they have until they receive the money from the FEGLI program. So it's very important to name a beneficiary. For one, like we were saying, it does avoid the probate process, but for two, it also can ensure that your money goes to the right place. Now, a couple of things with naming a beneficiary is that you want to make sure that the beneficiary named is current. We had a couple situations where beneficiaries were not named properly and they went to the wrong people. In both cases, it was former ex-spouses. And there was a couple of different reasons. One was this employee had a break-in service. He was a CSRS offset. He was hired originally prior or in the 1980s, in the early 80s. And then he had a break-in service, went to the military for a little while, then came back to federal service and never updated his beneficiary form. And so it went to his first ex-wife. The second instance was somebody completed the document and sent it in, but they never got confirmation back that the form was updated, and they just assumed that everything was good to go. know that any beneficiary form or communication that you have with the government, you should always receive a response from them, or especially when it comes to naming your beneficiaries. There will always be a confirmation that they've updated that. And so if you have not received any confirmation and you sent in your form, you want to check in on that or resend it, because with this situation, they assumed that everything was taken care of. Again, the employee passes away and the spouse is not receiving what they thought they would get due to the not getting confirmation from the form. So very important keys there when you're looking at naming a beneficiary and making sure that your current spouse or whoever is supposed to be named as a beneficiary is actually going to receive the money in a timely manner. And it's going to go to the right place. So keep that in mind. I don't have the beneficiary form up here, but we can link that in the comments or below, and just keep an eye out for that link where you can name the beneficiary for your FEGLI benefits. So thank you so much for watching today's episode about the FEGLI benefits and what happens in retirement and in death. Until next time.